everybody, guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about should you buy DWAC, what you must know, what's going on with this stock. So I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe to the channel. If you have any questions, concerns, ask them down in the comments. And guys, we are doing a giveaway, and pretty much what you get is you guys get free access to my course, you get access to the group chat, you also get a free hoodie, you get a free t-shirt, and a free backpack. So make sure you guys follow the description down below on pretty much how you guys enter. So what's going on with DWAC? We'll start from the beginning and work all the way up till now. So starting all the way back in October, DWAC, also known as Digital World Acquisition, partnered with Truck Media to create a social media app called Truth. And his idea behind it was, one, he got banned from Twitter, Facebook, so he might as well make his own social media app. Not to mention he has 80 million active, people that love him, 80 million voters. And his idea, if half of them kind of downloaded the app and became users to it, that's 40 million people that would be interested. And pretty much once he announced that, the stock went parabolic, went from $9 all the way up to $80, started selling off, found some support near $40, started to consolidate up and, hit this point at about $93, curled back down, hitting this 90 moving average line, hit it back up at 90, sold off, spiked all the way up to 140, sold off, establishing this 90 moving average line as some very hard support. And then resistance, on the other hand, would be right around here at about $92. As you can see, it's hit it several times, just has a hard time breaking above it, which is very common. So answering that question of should you buy DWAC? Well, the reason why kind of everything is moving up right now, we had this nice solid upward trend, is one, they announced their app. They actually did very, very well with great reviews, and Truth Social has received so much interest and could reach 1 million users in a way shorter period compared to Twitter and other platforms, which is great. When more people are on their app, that is going to entice more investors to invest, causing, that upward trend. Not to mention, guys, DWAC does have an upcoming merger with TMTG, and that has propelled some shares. Anytime you have a merger with another company to grow the company, it's going to cause an increase in price almost every single time. So given we have great numbers on the release date, because when they released it February 21st, it pretty much crashed their system. It glitched out. Because there are so many people. But I definitely think that's on the better side of the worst. It would have been way worse if no one downloaded it or tried to log in. So right now, is DWAC an absolute buy? So I definitely think there is some things you have to understand. Right now, the company is not profitable. They're actually losing money, which is very, very common. But for somebody that is a beginner and is trying to build long-term wealth right now, it's going to be it's going to be more speculative, right? So it's going to be more risky, more volatile, as you can see with these spikes, right? $9 to 180, sold off, back up to, highs here at, 135, sold off. That's a pretty decent move in a short amount of time. And you have to understand that stuff. My recommendation would be, one, a good strategy would be dollar cost averaging. Figure out a certain dollar amount that you want to invest and just be consistent with your investments. And what that's going to do is, if that's just say we have continuation in price and the stock goes up, that's fine because you're investing. You still own shares. But the beauty of it is when it sells off, just like we've seen in the past, just like we've seen through these dips, what you're going to do is you're going to continue your investing and you're going to average down your costs. So once the stock recovers, you make a lot of money. It's a great way to invest in the way that I would highly recommend for this stock. And another thing, I wouldn't go more than 5%. I would probably stick around 2% of your portfolio size into this stock. So what that means is for every $100 you have invested into other stocks, I wouldn't put more than $2 or $5 in this. Just because, yes, this thing could easily hit, $150, $160 again, but it also could sell back down to $20 or $30 a share. It's very, very high risk, and one small catalyst could definitely change the direction of the stock just like that, just like we've seen, in the past. So you have to understand that, but definitely it's worth looking into, guys. So guys, that is it. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe. If you have any questions, ask them down in the comments, and we will see you later. Take care.